Talk to us about off Caroline's chart, a terminal rate. What does a 5 or over 5% on a terminal rate mean for your world of financials?
Well, the banks have been in such an unusual environment for the last 14 years when most of the time interest rates were zero. So we're just going back to a more normal environment for U.S. banks, and what that means is that the net interest margin, the spread between loans and deposits, Main Street banking should have its greatest tailwind in over 4 decades. So that's actually good news when it comes to Main Street banking revenues. The concern, though, is will rates go up so much that it causes a hard landing in the economy, which would be bad news for credit quality and loan quality. So I come here today on Halloween. I heard you mention Halloween, so I came here with my
props. You got the price tag still at the bottom.
Okay, well,
it was probably quite an inflationary print.
Yeah, it's up from last year for sure. But so the question really is: are banks, bank stocks, are they a trick? In other words, are they simply, they look like they're standing tall, but then just like that, they can go down? Or are they a treat? And Caroline, I know you haven't had these too often.
I've never had a candy corn.
So there you go.
Delicious. Do you know the inflation and on candy? 13% inflation on candy, folks. So I appreciate the spending that you've just done.
There you go. So the conclusion, though, is I think bank stocks are a treat. The market thinks they are a trick because almost every recession, bank stocks go down, they have bad loans, sometimes they have to raise capital, and it's a terrible situation for investors. This time, I was almost going to say this time is different, but this time is normal.
Okay.
We're expecting normal loan losses in a recession. You have recency bias from the global financial crisis.
Right.
That was not normal. We're talking normal losses in a recession. This time we're talking about normal interest rates and normal spreads on traditional banking revenues. This time we're expecting more normal efficiency. So with simply more normality in the environment, we think, in contrast to the prior many recessions, bank earnings grow through a recession.